And I'm going to be bringing you a trade in the SPU after the day after the midterm elections. And yeah, I'm just basically going to kind of talk about my thinking behind how I sort of worked around the gap when we gapped up, and then just kind of a trade I really like to take in the SPU. Yeah, like and just how I kind of use the kind of lower time frame to then play into a bigger time frame play. So yeah, I mean we'll start off with the 30-minute cash. So, yeah, basically we'd kind of been gapping up and holding these gaps, and then come into the day after the midterm election. This was on the 7th of November. It was a Wednesday. So yeah, we came in the US session, and we initially had this kind of bearish kind of shooting star candle, and then the market found a low, and then we started to trade into it, and then we sort of trended higher for the rest of the day. And yeah, for me, kind of the way I like to trade these gaps is kind of, if the market is kind of holding the gap, you tend to kind of want to trade with them. But if they kind of start to fail and balance and then in kind of reverse, there was always the opportunity for this to kind of revert back to the kind of this balance we had down low. If the market kind of held this candle, but as we didn't, it was kind of suggesting the market was going to trend higher. So this was kind of important reference, and I really like these trades. When the market kind of rejects these big kind of rejection candles, you get really good moves just on a small time frame. Even if you're trying to looking to take, kind of stop moves, or if you're trying to position into a longer term trade, these are really nice kind of references to work around, especially when you have such big gaps. The market should kind of, it should do one thing or another in this scenario, and when it starts to fail above this rejection, then yeah, kind of leads to do one thing. So my thinking behind the trade was, like I said, that's kind of the two scenarios I had in the back of my mind when we did gap up. And then if I bring you on to my, I'm going to show you my 5 minutes. So this is my 5 minute on the day, and this is kind of how I used the lower time frame that I was talking about to sort of pinpoint how I wanted to execute. So if like I say, this is from the Wednesday. Obviously we closed strong Tuesday night, gapped up, and then we initially had this push up, then we started to base out, and when we based out, we made this low. I think it was really important to kind of watch the price action in here, and also just the kind of the lack of the offer, kind of if this thing was to kind of instantly drop, potentially if it wasn't going to have to spend any time here in balance. The failure in here and then the way we kind of was picked up again was quite important, and then this kind of gave you the area to position around if you wanted to play for this potential trend move. So yeah, the 82.5s was kind of what I was focusing on once we sort of based out, and then on the new TPO when we broke up, this was kind of the area I was focusing on. And yeah, on the ladder, I was going to kind of show you how I don't necessarily, I kind of wait for the market to really start to hold above here, and then I get aggressive more so when we kind of start to break above this high. I'm positioning in here and I'm kind of ready, and then I'm kind of looking to, when the market starts to trade into this wick, if you can imagine this as being the 30-minute wick, then you expect that kind of flush up, and then continue to move higher. So I'm going to show you how I kind of use the ladder and how I'm quite patient to start buying, especially when you're trading into these big rejections, because when you do get them, when you see these big rejections, obviously they're quite strong candles, so you want to be making sure you're positioning with the right move. So if I show this on full screen, and then we just try and find. So yeah, we're trading around 82.5. So yeah, like I said, guys, the 82.5s was the kind of that swing high we made on the 5 minute after we made the big shooting star candle. And for me, I really want to make sure that if this is the move I'm expecting, that I'm buying into the right kind of price action. So as you can kind of see here, we're starting to trade above 82.5s. The new TPO is coming up here, coming from a new 30-minute candle coming here in a few minutes, in 3 minutes. So for me, what I really want to see, I always talk about how I like to see the SPU kind of reload, and I'm not too worried about trying to chase initiative. It's like, as much as it's obviously you can kind of pay attention to things like the delta and the volume, that's really important, but all I want to see is that we can kind of have some really firm kind of stacking of the bid on above these 82.5s, because in reality, we're expecting this to trade out through the highs, and yeah, if this is going to be a rejection candle, I'm just making sure this is the right break. Yeah, so as you kind of see here, if I just fast move back a touch. Okay, so as the market now starts, so I don't actually lift the market until 83.5. So now that I'm kind of in at 83.5, coming to the new 30-minute candle, so now my kind of risk is above these, kind of below these 82.5. So I want to see this firm bid kind of keep showing itself, and then I can kind of work a kind of small range within this above these 82.5s, and then I can kind of get more aggressive as we trade into the wick. So as you can kind of see here, the transactions, as everything's sped up, the kind of volume's picked up, the kind of churning on the bid's really solid. I'm like, it's kind of stalling into the bid and constantly stacking with more liquidity, which I really like. As much as we're kind of trading into the bid, is it kind of being soaked up above these 82.5s. Like I said, it's pretty firm right now. So this is kind of how what I like to see. And then for me, it's kind of like trying to manage my risk between here and the 82.5s and how far we're going to squeeze, etc. So, like I said, obviously during these periods, I'm kind of paying attention to other things like my volume and my delta, but I'm also, I'm always trying to, know where my risk is. And like I say, the whole nature of the price action is really important. That it's kind of everything's kind of changed in terms of the speed of the transactions. The nature of the bids kind of really aggressive, is really firmed up. So for me, these are all kind of characteristics for something that I was going to look to play for with this kind of risk rejection trade. So like I kind of say, I'm going to kind of get more aggressive every trade through the highs. So if I fast forward slightly, so again I'm kind of retesting the 82.5 here. And I always kind of like to see that's kind of stalling down that exhaustion into the bid, kind of whichever way you think the market's trading, and you're trying to position with, you're kind of always looking for, when the market's starting to stall, and because like I said, when the clips into the bid they are quite big, and it seems like a lot of volume's going through, but then when the actual market starts to stall and can't actually go any further, and it starts to downtick in small size and then puff the bid up again, I really kind of, and obviously on the offer as well, if it does a similar kind of thing, I'm looking for those extremes, looking for that kind of exhaustion point, which I then, kind of define the risk even further more so. So, now it doesn't have to necessarily be below 82.5, so you can start to scale out below, 83s, 82 and 3/4 kind of thing. So, again, the market's kind of holding bid. You're kind of thinking that if this is a rejection, then this should, it should hold up. It should kind of be, it should get more aggressive the higher we go, kind of thing. So the fact that we kind of stalled into that area and then we've gone bid again is quite important. So as you're going to see here, I should kind of, as the market starts to trade up towards the high, so yeah, we're kind of be balancing up here. And I think I've mentioned this before, how I like use of these kind of volume wedges on the ladder. So yeah, I like to use the volume on the ladder here. And for me in the SPU, I kind of want to see it hold the bid above there, and then I can kind of clip the next price to be really confident that we're going to trade through here. Bearing in mind this is now the top of the really big wick of the rejection. So, and you can see here, I'm looking to lift the next best price. I want to see the 87.25 kind of hold up, kind of reload a couple of times, and then I can kind of be convicted to add more as it trades through the highs. So, as you'll see here, I'm kind of patient for this. I'm using the volume ledge here to kind of, manage my risk again. This kind of gives me a new little area to, where I feel I can be quite precise with my timing of the trade. So again, I'm feeding a bit more in, and as the market starts to hold this bid, starts to hold a bid above these 87.25. So again, now, this is the thing. If this is, I'm really quite convicted that this is going to go higher, obviously, at this point, but, you can kind of start to scale out back below this kind of low volume here. This is quite an aggressive play here. You kind of need to flush the highs, but you want to see this bid kind of hold firm. This is kind of the thing. As much as I like to see the initiative, and you're seeing this through the delta and the volume, you kind of just want to make sure that the bid is firm, that they kind of, exactly, and everything kind of, it should kind of just stop from here. It should be quite a hard move to kind of chase in that sense, because it's going to be quite, it should be quite like a splashy move up higher. So I'll see how far I hold this for. But I mean, you know, if you wanted to be really kind of, if you were really convicted and really, you know, for example, really bullish, you had a really kind of skew to this market, you know, you could have been doing this kind of more aggressive around the 82 and a quarters when the price action shifted here. I mean, there was all, you know, if you were really convicted and you were confident in the market trending higher, then this was there. You could have started to really pick up at. But I mean, if you want to have as much confirmation as possible for the move, then you can kind of start, you know, maybe start, like I sort of executed, you know, start to scale in around the 82 and a quarters, and then be more aggressive as the market really shows itself. Either way, I think is you know, really good ways to manage this kind of trade. You know, what it does above the high is kind of how it trends for the rest of the day is kind of tricky to manage, but you know, those are the kind of things, a little like kind of small pivot points in the market where you can actually be quite precise with the SPU. I think are really good. So I believe, let's see how far this trades up, 89s, 90s. So yeah, guys, I mean, I'll leave it at that for now. Yeah, I mean, I'll leave it there. I mean, the market did kind of go sideways for a long time after this. So if I just bring up, I mean, it does grind higher on the 30-minute here, but you know, these periods of time, you know, these are 30-minute candles. It does go sideways for a long period of time. So, you know, you can kind of use, you know, use all these little areas here to kind of, you know, if you want to play for this longer move, perhaps you're kind of being more passive here. If you're looking just for the kind of stops through the high, you know, maybe you're just more aggressive through here. But it was all kind of about how it shifted as we kind of traded back up through this wick. It was really important to kind of notice the change in price action here. So if you do have this recording of this day, I would definitely recommend going back and looking at this whole area here, the first kind of hour of trade, and notice the kind of difference on the offer and then the bid. I think it's quite distinct.